modestly in the last 6 weeks of 2019. 2 districts came in above average growth, and 3 districts were subpar. Consumer spending growth was modest to moderate, with holiday sales reported to be quote-unquote solid. Car sales expanded moderately. Manufacturing pointed out as the weak area of the economy. It was flat in most districts. Many districts said tariff and trade uncertainty continued to weigh on some businesses. Job cuts or reduced hiring were reported among manufacturers, energy, and transportation sectors. However, employment was steady to rising in most other sectors, and throughout the nation, labor markets were said to remain tight, and widespread labor shortages were actually reported. Wage growth, however, despite the tight job market, something we've been talking about for a long time, was modest to moderate. Home sales flat overall, with a lot of regional variation, as you might expect. Now, prices rose at a moderate pace. However, some businesses were indeed passing along tariff increases to consumers, and I want to take you through just a few of the regional comments we got, which in many cases represent an about-face from the prior Beige book. For example, in New York, businesses in all sectors plan to raise their selling prices in 2020. In Philadelphia, the share of non-manufacturers reporting higher freight prices rose significantly, and they anticipate higher prices among manufacturers. And then one last thing here in Cleveland, retailers said that tariffs continue to put upward pressures on costs. So we have these districts around the country reporting that these tariffs are still working their way through the economy. That could potentially put some upward pressure on inflation. But overall, all of this reads like about a 2% trend economic growth economy, reading this Beige book.
So, Steve, as you highlight some of those price increases that have either occurred or are in the pipeline anticipated, is that good news to the Fed? In other words, does that help them reach or maintain their 2% inflation target?
It could put some upward pressure, at least temporarily. What it is bad news for, Tyler, is perhaps the retailers and the sellers will see if they're able to keep their margins. What seems to have happened is in prior Beige books, we had these higher input costs, but inability to pass them along. What we seem to be seeing now is they're going to be passing them along in an effort to preserve their margins. Other Beige books, however, said the competition is too tough. I was going back and reading last month's where it said a restaurateur said, hey, we're getting higher prices because of tariffs, but we can't pass them along because of competition. We'll see if this is an effort by businesses to pass along these higher costs and if it sticks. That's not been the case in the past.